Polio's back. Europe is burning. Sri Lanka collapsed. The Secret Service is deleting text. Germany's pivoting on nuclear. We'll talk gold. We'll talk the dollar. We'll talk Elon and Bitcoin. A lot to get to. It's good to be back, everybody. I am Gerardo Del Real, along with Mr. Nick Hodge. This is therapy session, otherwise known as Bizarro World, number 178. Sorry to miss last week, everybody. As you know, some of you know, my father passed unexpectedly last Wednesday night. So, dealing with that. But it's good to be back, Nick. How are you doing?
I'm doing good, Gerardo. Continued condolences about your father. I know that's obviously a rough thing to go through. So I'm glad you're back at it and are pushing through, and was happy to hold it down last week. And otherwise, I'm doing quite well. Just watching the markets, biding my time until later in the third quarter or fourth quarter until it's actually time to buy things. It's not time to buy things now, and I'm sure we'll talk about that.
Biding your time. I know it wasn't a pun intended, but Biden's got COVID. I forgot to mention that. I mean, I kind of don't blame Dad for tapping out at 72, given the condition of the world right now. There's a lot going on, and so I appreciate the condolences. Let's, tough hit, but let's get on with it. Let's start with the markets. You put out a note to subscribers earlier today. I don't mind highlighting the note because of the fact that this podcast won't go out until early next week. It's Thursday the 21st today. People should get this on Monday or Tuesday of next week. But you're short in tech, so that kind of gives me an indication of where you think this market is headed. Tell me about it.
Well, we just had like a 1 or 2 week rally across the board. If you remember, June was pretty abysmal for the SP, and it was trending down. Even days that it was up, it was reversing course and ended up closing negative. That changed in the past week here, the second week of July. People started getting giddy, calling earnings not as bad as expected, which is easy to do when you lower the expectations the week before. Yeah, right. I mean, the earnings are quite bad. Profit margins are shrinking. Costs are up. Banks are ceasing to buy back their stock. Companies are laying people off. Ford's going to lay off 8,000 people. Google has paused hiring. Apple has paused hiring and is looking to cut costs. And we're not even a little bit of the way through earnings season yet. Next week, you'll get a peek at McDonald's and Google and Apple and Meta. And I think this rally that you're seeing right now is going to turn out to be a bear market rally. And so I've told you, and I've said on this podcast a couple of times, that I've shorted tech. I haven't put it out in the ether there in the public. I was content to do that this week. I think people getting ahead of themselves. I think they're looking for any reason to go bullish. I think the buy the dip mentality has not been entirely erased yet, and people need to get that out of their minds. It's as I've been saying, it's not time to buy the dip yet, and people just want to buy, right? They're ready to speculate. And I think this market's got a bit lower to go. The dollar took a bit of a pause, and that's allowed some things to go up, including, Bitcoin got above 24,000 this week, but quickly pulled back to 22,000. And so, and I haven't even mentioned the fact that next week we'll get a negative print on the Q2 GDP that comes out July 28th. So quite a few negative catalysts, I think, ahead in the next week that gave me the confidence to short tech, which is, an easy thing to short relative to other sectors. And so that's the reasoning for that.
Well said. Gold pulled back briefly to the high 1600s before rallying here today to, I believe, the 1718 level. You cited a little bit of the dollar weakness. I did an interview earlier this week with the network, and we'll post it here over the next week or two once it's published. But she asked about the dollar strength and whether I thought it would continue, given that the dollar has started to pull back. My response was, I absolutely expect the dollar to continue to strengthen in light of capital flow, in light of, PE multiples that are no longer sustainable, and in light of the fact that I think the dollar will continue to be the cleanest dirty shirt in the laundry basket. So I say all that to say, do you think this little brief blip back higher above 1,700 is sustainable for the gold price? And do you believe this dollar rally is over?
No, I don't think the dollar rally is over. We had talked recently that gold could break below 1700. We need to test that 1680 level. I don't think it got a thorough test of that. It was just a ever so brief dip to that level here this week, and I think you could see that again. I think people still want to hold dollars. Yeah, and I think that the worst of the selling isn't over yet. So I guess one more thing about what I was saying earlier, there was a Bank of America survey out like a fund manager survey talking about how sentiment was dire and capitulation was here. Saying that this fund manager survey was the most negative it's been since October 2008. And that's one of the reasons that the market rallied, right? People were saying that basically the bottom was in and that capitulation was at hand. Well, no, the fuck it isn't. I mean, if you look at a chart of the S&P, it went down another 25% after October 2008. It didn't bottom until March of 2009. So sentiment is not a catalyst, certainly in these conditions, for all the reasons I mentioned earlier. And really, that's a further answer to your question of why I think the dollar will strengthen further.
So the dollar strengthens. Do you think gold pulls back a little bit lower? Or do you actually think it's continuing to find its footing here at these levels?
We'll see when it gets to the high 1600s. That's that 1680 mark. I mean, if it can hold that, then it can bounce higher from there. We talked last time you were here 2 weeks ago how I was writing. You can see a brief dip down to the COVID lows, down well below that, in that 1500 level. I think that would truly be a flush out. But one step at a time. Let's see that 1680 level first and what happens there.
Let's talk Bitcoin. You mentioned it rally into 24 before pulling back again to 22. This amidst some dollar weakness, although again brief dollar weakness and a brief what you described as a bear market rally in the major indices. That correlation continues to hold up, right? The major indices go higher, Bitcoin tends to follow. Major indices break down, Bitcoin tends to come back. Do you see that correlation continuing?
Yeah, Chris Curl was talking about this a little bit. We were trying to figure out what was going to break that correlation, and he was talking about that in a call-in we had for his subscribers last week, and there wasn't really anything on the horizon that could break that correlation. He talks about there's this Mt. Gox settlement, which you'll remember was one of the largest exchanges or places you could buy Bitcoin back in the day, like early in the day, like 2013, 2014, and then there ended up being a scandal where people were redeeming 2-for-1 Bitcoin because of a glitch, or however you want to phrase that. Well, the settlement is here, and there's like 140 or 141,000 Bitcoins that are going to be offered as payment to those people who were affected, and the thinking is that some of those Bitcoins will immediately hit the market because people just want cash, like we were just talking about, or don't want to go through the volatility of the sector, and that could cause a washout in the Bitcoin price that would then allow it to go higher. I don't know if that breaks the correlation to the S&P or not. What I do know is this: that I was buying it below 20,000 and I was shorting it above 23,000. So I have it's like trading around a position, right? I hodl what I have in my wallet, the Bitcoin that I've been buying for the long term, because as I've said multiple times, I see that rise to six figures over the course of 5, 10, 15 years, whatever it is, that asymmetric reward opportunity. But in the short term, content to short it because of that correlation that's holding up. So, in my personal account, I shorted, Bitcoin this week through BITI, which is like a short Bitcoin ETF. So, playing both sides, which I guess is not for everyone, but you got to do what you got to do in this climate, I guess.
Outside of shorting stuff, are you actually buying anything? I know you had some bids in for a couple of names here in the past couple of weeks, anyhow. And it's been a few days, obviously, since we caught up. But anything that actually filled?
What filled? Revival filled. It broke down even further as gold dipped below 1,700. So I bought some Revival. I bought some Cucho Copper, which I did the math on today. At its current market cap, you can buy its 1.1 billion pounds of copper equivalent for 2 cents a pound. And what else did I buy? Just a tiny bit more Playboy. I just continued to peck away at that. I view that as like a 3-year hold. So at current levels, you're basically, I think I might have said this on the podcast before, buying it at the valuation they paid for like one of their lingerie units without any value being ascribed to any other part of the business. And it's one of the most recognizable brands in the world. So those are three things I've been buying.
I like it. I see Elon, the best billionaire troll on the planet, saying everybody called him fat, so he sold all his Bitcoin.
I don't know what to make of that guy.
Say what you say about Elon. He's entertaining as all hell, man. He gives it as well as he can take it. And if you're willing to look in the mirror and laugh at yourself a little bit, I think it's healthy, right? These are obviously interesting times. He tweeted again about 4 hours ago. He said, to be honest, it's good motivation to work out, eat healthier, and maybe take my shirt off outside more than once a year. So, I mean, you can't knock the style. You can knock a lot of, lack of delivering stuff on time or lack of delivering stuff at all sometimes. But he's entertaining as all heck. Uranium. I listened to a couple of conference calls this week amidst my travels, and I mean, the fundamentals are as bullish as I think I've ever seen them in my relatively young life. Any thoughts there, Nick?
Just that everything the long-term uranium bulls have said over the past 10 years is starting to play out, right? I remember saying when Germany shut down their nukes that, that's not the best idea, right? And here you have them not only they've refired up their coal plants, which, I mean, what do you want to do to meet your climate goals? That's not going to get you there. And they've had to do that. And now they're saying that the 3 nuclear reactors that remained online, they're going to have to extend their lives because they're worried about the Russian gas supply, right? And we're headed into winter here in the northern hemisphere. I mean, I know it's 100 degrees right now, basically everywhere, but
it's 190 in Europe.
That's crazy, right? But it'll be cold there soon enough, believe it or not, and they're going to need more energy to heat their homes, and so they're turning to things that they once turned their back on. And it's not just them. Here in the States, we're extending Diablo Canyon in California, and the Democrats are on board with that. The Japan energy minister was talking this week that they're going to try to get some nuclear plants back online as fast as possible to provide electricity for the winter that's coming. And if you want to talk about capitulation, it's not in the stock market; it's in the energy market. People are capitulating and realizing that they're going to have to turn to nuclear to bridge the gap, right? I was even looking at some places in Europe. It's so hot and so bright that the solar panels are malfunctioning, right? And so they're designed to work from the sun. And so that's ironic, right? And anyway,
should have kept the solar roads.
That's right. Maybe they would have melted too. Who knows? But and uranium still sits below $50 a pound. I mean, it hasn't been able to catch a bid either. And the fundamentals couldn't look better, like you say. So, but I've certainly not sold any uranium positions. I like the ones I'm in. Had recommended Denison maybe a month or so ago when it was below $1 US, and it's back over $1.10 US, and they're starting to firm up a little bit. So, I mean, what are your thoughts on the space? You listen to the conference calls, you said.
Everything you said. Everything you said. I mean, I absolutely think this is a time to accumulate, not to sell. I interviewed Stephen Keith earlier from Labrador Uranium. That's one of my favorite uranium speculations out there. I'm a biased shareholder, wrote a check, at lower prices, continue to hold every single share. And look, there's bargains all over the place. You just have to decide where you want to make your money, and you have to decide how long you're able and willing to hold those positions to get those types of returns. And I know we said that 2 weeks ago, the last time you and I were on here together, but I think that continues to remain true. I think if you missed the first leg up in the uranium space, I think the next one's right around the corner. And, could it take 2 months? Sure. Could it take 4? Sure. Will it matter at the end if you're able to hold through? No, I think it's going to be extremely profitable. I have similar sentiments in the lithium space. A lot of companies doing some really good work. A lot of companies that I think will be hitting inflection points here very, very soon, right? Everybody knows, I think by now, because I keep saying it over and over, my largest two personal holdings are Nevada Sunrise Gold, which is on to a lithium discovery in Nevada, of course, and Patriot Battery Metals, which should start seeing some of the field work results from the sampling that the team has done over, a lot more of that 50-kilometer trend than it's ever explored before. We should start seeing results there. And I can tell you this, Nick, if they find a similar trend to the current 2-kilometer trend that I believe holds already at least 100 to 150 million tons of, roughly 1% lithium, then watch out, because that has the potential to turn into an absolute monster. And this market cap and these prices aren't going to hold despite the tough bearish markets. So no, I continue to be excited about the same things I was excited about. I think uranium, lithium are going to be the first two sectors to deliver gains before the overall indices and gold eventually turns. But I think in Q4 of this year, I think everything's going to be back to the races, because I don't think that Fed rate hikes are going to be sustainable past another 150 basis points. I think after that, there will be enough data for the Fed to say, hey, midterm elections are on the way. We don't want to meddle. Inflation's coming down. Housing prices are stabilizing. Inventory is rising. All the bullshit that they fed you on the way up, they'll feed you on the way down. And, it is what it is. You can either make money from it, or you can complain about the fact that we have central bankers that are literally imploding countries around the world, right? I look at what happened in Sri Lanka, and I feel horrible for the people in Sri Lanka, right? Inflation hit 59% in the month of June. Annual inflation, 59%. Those are official numbers. So that the real numbers are much, much higher. And look, they're out of medicine. They're out of food. They don't have access to foreign currency. I look at China, and China's got lockdowns, and they have the military out there preventing people from withdrawing their own money. I look at Europe. They had the busiest fire station response since the World War. I mean, these are just unprecedented times in so many ways. And look, the Fed is responsible for the fires and the climate and other things that are going on there. But it sure the hell is responsible for the inflation that's been unleashed and the lack of accountability that has come with that. And so, no, look, interesting times. We talk about fourth turnings on this podcast often, and I think they're all just converging, right? Politically, economically, socioeconomically. There's 14 prisons in Texas that don't have air conditioning units.
Wow.
And you can feel however you feel about prisoners, but it should not be acceptable that in 2022, one of the wealthiest states in the union has prisons without AC units.
It's the reason that the U.S. life expectancy went down recently. I'm sure you saw those headlines over the past year or two. One of the main drivers of that is people dying in prisons at a young age. Isn't that crazy?
Insanity.
And you talk about the bullshit that they fed you on the way up. I mean, I was writing about it recently and talking about it in last week's podcast about the lack of leadership and not just the transitory stuff, but I think you had the White House press secretary stand up last week or 2 weeks ago talking about, the American economy is the strongest it's ever been. It's like, what planet are you living on? Did you go out with the James Webb telescope? Like, where are you looking at? And then I think that the leaders in quotes, both politically and financially and in the media world are realizing that their bullshit is being seen through. You had like the New York Times this week, for example, had all their editorial board write mea culpas basically about all the stuff they were wrong about. Paul Krugman had to write an article. Krugman had to write an article about how he was wrong on inflation, right?
People that listen to him should have to write an article too.
It's crazy.
Fuck, I mean, come on. It's not like this is he's never been wrong before. I don't know why people continue to give stock and fucking attention to these PhDs that have never traded a market in their life.
He's the guy that said that the internet was never going to amount to anything, right? The Onion had an article this week, one of the best media outlets in the country, about how the New York Times announces a new editorial board member who will contribute nothing to society 3 times a week.
Absolutely hilarious. The euro has reached parity with the dollar briefly. The BOJ, the bank, because this isn't just the Fed here in the U.S., the Bank of Japan says they'll continue to ease as long as much as they have to achieve whatever it is that they're looking to achieve now, whatever today's line is. Now, look, it's absolute madness out there. While we're on the social commentary, I can't help but see and mention the first fucking case of polio in 2022 that we've had in a decade in New York, of all places. I mean, this is 2022. What are we doing? Yeah,
the COVID is coming back. COVID-19 is about to turn into COVID-23. I mean, you've got this BA.5 variant running rampant. You mentioned the president is infected, and things definitely aren't going the right direction. I guess two other things I wanted to mention is, you've got these midterm elections going on now, and you've got these people who are in office, running on things like, oh, we're going to lower prices. It's like, wait, well, why the fuck did you let them go up? If you could lower prices, like, where the fuck were you for the past 2 years, right? Oh, that's right. You were the one signing the bills to send out the checks that caused the inflation, you fucktards. And so you look at the polls, right? And a majority of people now don't want either, I guess I should say neither Trump nor Biden to run, right? It's like 75% of the country or something like that. Well, let me read it. I got it up. 71% don't want Biden and 64% don't want Trump. Those are large numbers. Meanwhile, Biden's approval rate just continues to go down and to the right, man. It's lower than Trump was at any point in his presidency. And people are feeling it for sure. It's a hot summer, and we called that a while ago. And I think people are starting to see through some of this political bullshit.
We talk about the collapse in our institutions, and I continue to give these fuckers way too much credit, right? I couldn't believe that the Secret Service actually deleted texts from January 5th and January 6th.
It's amazing, right? And they might not be able to recover them.
The gall. The way the American public is treated by its institutions that are supposed to protect it is damn near, not damn near, it is criminal. It is absolutely appalling. I don't care what party you believe in, or if you believe in a party, you believe in a God, whatever you believe in, everybody should be absolutely appalled. I mean, every week it seems to just get more and more bizarro.
And I don't see a lot of good options. Like, I got my little midterm sheet for the state of Washington the other day.
Your spreadsheet.
And I was like looking at who I had to vote for, and I was like checking out their websites and their platforms, and I was like, you gotta be kidding me. I can't vote for any of this crap, right? So the one thing I voted for was like, they had this levy up for new taxes. I voted no and sent the rest of the thing in blank, man. I mean, like, fuck.
The Hoover Dam had an explosion.
I didn't see that. Tell me what I did see. There was a fire burning on one of the turbines. That's all, yeah.
I mean, the fucking Hoover Dam had an explosion. It's been a heck of a week, man. There's monkeypox. I mean, I don't know what to say, Nick. I see a Coinbase manager was arrested for insider trading. I see Nancy Pelosi and her husband are still all good. Wonky world out there.
He was buying chip makers before the Congress voted to support the chip makers. Surprise, surprise.
Absolutely bonkers out there. Anything on your mind that you really want to get off your chest, Nick, other than what we've discussed?
Oh man, I got to talk about this blueprint. I gotta lay a foundation for that. So in the next week or two here, by the end of July, we're gonna have out a new report for my monthly service, which is Foundational Profits, and it's going to be a blueprint for any market, including the bear market that we're in. And what that means is really what I've been preaching for the past 10 years in other services and other newsletter divisions that I founded. And that's maintaining your individualism and your personal sovereignty, and doing that by managing your own investments and how to do that, right? The accounts to set up, the tax strategies to pursue, and why you can manage your own house, family, portfolios better than a professional can for you. And It comes with a library of reports. There's 5 reports we're offering that cover a lot of those topics that I just went over there. And again, that you can use in any market. So what comes to top of mind is how like a financial advisor will tell you you've got to stay invested, for example. And if you would have done that for the past 7 months, year to date, you would have lost 20% of your money or more. And I'm not saying it's possible to time the market every time, but I am saying that it's possible to avoid, to a large extent, some of the drawdowns, certainly when the writing is on the wall. And so we'll cover how to do that. There's like a 35-minute long video that we'll be putting out, and people will have the chance to sign up and get those 5 reports, which again, I'm calling a blueprint for any market. So there probably won't be a link for that in this podcast, but certainly you'll start seeing the advertisements and the emails for that in the next 2 weeks here.
I like it. Listen, everybody, I know it's hot outside, figuratively, literally. The world is getting crazier by the day. I realize that. Hopefully, we provided a little bit of insight on how you can continue, to play the long game in the market and to be able to preserve and enhance some of that wealth or, some of the growth in your bank account. But it's the summertime, and I encourage everybody, get outside and spend some time with family and go do some fun things and make some fun memories. And not just the one, there's many, many things that I'm very at peace with as far as my dad passing, despite the fact that it was really sudden. And, with us, there was really nothing left unsaid and really nothing left undone. Of course, I would love more memories with the guy, but it feels really good going to bed and waking up knowing he knew how much we cared and how stable we were and how much my siblings and I took care of each other and how supported he was until the very end, despite the fact that we didn't know he was going. So it's not a bad way to live, everybody. If we just did more of that with each other, I think we'd have a better planet, better city, better community, better world. And man, when it happens and you get a couple of tough hits like we have with my mother-in-law a few months back and now my dad, it brings a lot of comfort knowing that you told people you loved them and you gave them hugs when you could and you made all the memories that you can make with them, and we all have a date. So I think it's probably a good place to leave it, unless you have something to add to that, Nick.
No, that's it. You nailed it. The allocations that you make in life aren't just in the market. So you allocate to family and loved ones and patience and all that stuff is an asset class as well.
Absolutely. Absolutely. Appreciate everybody's time. Sorry for missing last week, everybody. I'm Gerardo Del Real, along with Mr. Nick Hodge. This was another well-needed therapy session, number 178 of Bizarro World. Take care of each other out there, everybody. Go make some fun memories, man. It's worth it.
See ya. Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.